What's going on, everybody? Good evening. This is the market wrap up. It's Brendan from Market Makers Pro Trades video, my friends. Guys, we're doing a special sale till the end of the year. If you would like to try out Pro Trades, now is the time to come. Over 200 people have joined. This will be a small room, a capped room. We're going to do first come, first serve basis. Download Discord. The link is in the video description. Lee will message you. You can message Lee. You can try it out. No risk, no obligation. I think you will love the room in the community. We have a professional staff of professional traders. This is what we do day in, day out. All right, guys, let's jump into the TA. I'm going to start off with the R2K, the Russell 2000 index, guys. So this is the Wyckoff price cycle. It has 4 key phases. If you've seen my YouTube videos for crypto, you're familiar with this. So the 4 key phases are accumulation down here at the bottom, markup, distribution, which is the final selling, and the markdown is when you just collapse and go back down again, okay? That's a Wyckoff price cycle, 4 key phases. Within that, you have sub-steps like reaccumulation, Wyckoff spring, Wyckoff up thrust, down spring, all types of different movements, okay? I trade Wyckoff price cycle with Fibonacci, married to a bunch of different techniques that I use, but this is how I put them. I put them in Darvis boxes so you can clearly see the phases. This is the COVID crash, guys. Clearly accumulation. Reaccumulation occurred just above the 233 moving average. You have the 21 crossing. You have your bullish parabolic markup phase. Now we are in distribution in the R2K. Very important to note because the R2K is the leading indicator for the health and welfare of the larger indexes. And as you guys know, the Fed did not raise interest rates. All they did was increase the taper. Instead of ending in June, it's ending in March, and the markets are reacting. Initially, they were very happy about it, but they're reacting. And now there's a blackout period as well where companies cannot buy back their own shares. We could be setting up for a nice little correction between now and New Year's. We'll see how the markets continue to react, but it looks like the Grinch stole Christmas and potentially no Santa Claus rally this year is how the cards are shaping up right now. Let's go ahead and move forward on the Russell. Something you guys really need to pay attention to is this EMA death cross on the daily on the R2K. Like I said, this is a leading health indicator for the other indexes. The small caps lead the large caps, and you have the 21 about to cross the 233. This is the daily time frame. This can take more days, guys, to print out here. But when this occurred, you haven't had one occur. Do you remember the last time it occurred? You can probably guess when is the last time this occurred. The COVID crash, okay? And the COVID crash gave you a nice, let's just grab it from one of these candles down here, gave you a nice, shrink that up, was it 37%, something like that? Yeah, 37% crash in the Russell, okay? So we need to watch this because if we lose this trend line here, this Darvis box that we're trading in as well, around 2085, you're going to see the market change. Now, you've been up in this area since January of this year, okay? Since January of this year, you've been up in this area. So you've been here all year long. You've been here all year long in this distribution box. I can show you better on this screen. January 4th, you've been in this distribution box. You could stay up here longer. Price is ranging. You know, Wyckoff characterized this as behavior of the price varying widely in volatility as well, okay? So you have contractions here of price moving 4%. You have a new all-time high here to a dump of 13%, and it's all lateral movement. You see this? It's all to the side. You're not doing this markup phase anymore where you're just skyrocketing up. This is distribution. This is supply selling into demand, okay? This is what's happening here. You're getting a lot of retail, the largest amount of retail money ever on these dips, like the Omicron dip. They're buying it and they're pumping it up, and it's going to be keeping going up and down in waves, and eventually it's going to crash out, okay? So it's something that we need to pay attention to. Let's go ahead to 4-hour time frame. We did have a bullish pattern here in the R2K, a black swan. We trade these often in the room. Trend line from A to C to denote an entry point. If we break that trend line, I wouldn't touch this until we broke this trend line, okay? This is something I'm not even interested in because it is such a bearish index right now. We validated over here. We actually validated early, got a little price bump up, couldn't even get up to the trend line and fell right back down when we hit the DMA cloud. And now we're at the second time at the PRZ. But look, I mean, I think the Russell's going to keep going back down. It may come up a little bit, retrace and fall back down. So it's something I'm watching. Let's switch it up and go to gold, guys. Gold. I hope 2022 is a better year for gold. other than this nice rise up that we had, which we traded in the room, other than that, this has just been chop for a long time, guys, all the way into the late November now. It's just been chop, 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 chop. We formed this bearish shark pattern. We did get a little bit of a decline. Let's get some price targets on this in case any of our friends watching this video are trading gold. And let's get some price targets where we could go to. So the 618 is 1782, the most commonly retraced to fib. However, you know, if you lose that, you're going to 1760 on GAN. At these levels down here, I'm interested in buying, okay? I'm interested in buying. I'd love to see it correct a little bit more. I don't think it'll correct too much more than that because of what's happening in the markets. But, you know, I'd like to see this get up. And where I get really bullish on gold, we got to flip 1830. We flip 1830 consistently, use it as support, make some upward momentum. I'm going to get really bullish on gold. And that will happen at some point when these traditional large financial players and institutions in the stock market, in the crypto market, start looking for secure assets. Commodities is where a lot of money can go. And commodities, you can see it happen in gold. We shall see gold, silver, maybe some of the other precious metals, maybe some of the metals like lithium involved in battery production. These are all things that we can track and trade, guys. So let's go ahead and advance. The DXY had a little saucer and plate pattern. That's what the pattern was originally called when it was developed in the 1960s, I believe by Ellers. O'Neill made it famous when he called it a cup and handle. And here's your handle right here, okay? This is a bullish pattern. Once again, the dollar did pump initially on the Fed news until the markets pumped, and then the dollar dumped, and it dumped hard, okay? So now we're going to get some compression waves. It looks like I'll start measuring these as they grow. We're on the 4-hour time frame. And eventually we're going to bust out. Here's our pivot line right here. I'd like to see price come out and move up towards the 618 of the fib, which is right here at GAN resistance of 97.7. May find that as resistance. If we do flip that, super bullish on the dollar for some big moves. Affects all of our currency pairs, obviously, so we'll be tracking it. SPX on the weekly, we have a bearish black swan. Again, we did drop the price here. This is a trade that was in the room as well in a smaller time frame. And price did fall, and it is seeking support on our Ichimoku moving averages here. As you can see, it wicked down to support, and that's where price is right now. We got to bounce up, and you might be thinking, how did we get a bounce up? Well, we posted the trade in the room, guys. Let me go ahead and dive into this. On the daily time frame, we had a bullish cipher pattern. You can see we literally hit the PRZ, just below the PRZ, and we got a nice bounce up, back up on retracement. We're at the 236. I don't know how much higher this will go. Let's go ahead and look at a smaller time frame, the 8-hour. You can see it better here. The 8-hour time frame, we also found support on our 233 moving average, okay? Key moving average. Got to stay above the 200s, guys. If you start losing the 200s, the 233s, you are going into a bearish market sentiment, okay? That's 6.5 months, 6.5 months of trading data and health and trend of the market. You want to be above it. You bounced off it. I don't know how much higher you will go. If I had to guess, I would suggest this 4630 is going to provide a lot of resistance. We can pull some fib targets over here on our cipher pattern and get some idea. 618 would get you to 4670. 382 to 0.5, you'll be right there in between with the 4630 on GAN. I think 4630 is a safe bet, okay? So that's where I would be looking at if we get a bearish pattern to be taking a short trade as well. But currently we have this long trade on the SPX. Here it is on the 4-hour time frame. As you can see, we validated it and we are moving back up. Not a lot different from the larger time frames. And again, I anticipate 4630 giving us a lot of resistance. And our final one, let's look at the NASDAQ on the daily, guys, the NASDAQ. So this is where all the tech stocks are, all the overvalued tech stocks that want to be in the ARK ETF. They're all in the NASDAQ. But as you can see, we have a bearish black swan dropping price, and we're struggling to get above and stay above 15,700. But I do see another pattern at play. So let's go ahead and pull this out and get an idea of where we could possibly see this index going. Let me grab that. These patterns tend to share points with other patterns, guys, and the candles, as they change, you get new targets. So this, where's my 786? 787 is close enough. This is a bullish cipher. This would call for price to come down to 13,519, at which point price would hit the PRZ here at point D, and you would see a reversal back up. Where could this go to? Well, we can pull some targets. These are not guarantees. These are just predictions based off of the pattern validation to 618. 15,537, which you can see is being used as support by the current candles and previous candles in trend. So this is a very safe bet, the most commonly retraced to fib. In a bullish sentiment, you could get up to the 618. However, just like with everything else, since we are currently having a lot of problems in the indexes, I would anticipate us not really I would anticipate us struggling and not potentially getting above 15,100 on a retracement if the NASDAQ does come down here. And I will be shorting the hell out of this if we find another entry point with another bearish pattern, because this, I believe, will come down. A lot of these NASDAQ tech stocks, guys, require constant growth, like 50% growth year over year, to be able to make any money at all. And wait till you see what happens when the Fed raises interest rates next year. A lot of people think they won't be able to do it because of the way the markets will react. And again, we could potentially be setting up for a nice correction between now and New Year's with the way the markets are behaving now, the bearish patterns that are being printed everywhere, and the R2K looking to make an EMA death cross. That would be a massive acceleration of the doom loop once that happens. All right, guys, tune in. That was your market wrap up for today. Tune in tomorrow. I'll have another video. We'll cover the indexes. Maybe we'll do some Forex pairs and look at some other precious metals. And appreciate all your support, guys. Please remember to click the like button, subscribe to the channel, check out the room, check out our sale. It's a fantastic community with 200 people in there now. It's going to be a small professional trading room. Love to see you guys join. Talk to you guys soon. Have a great night.